Welcome back to the Pro Ticker Podcast, your Thursday morning edition covering major financial magazine headlines, everyone. Today, we're really embarking on a deep dive. We're sifting through, well, an incredible stack of recent headlines from places like CNBC, Reuters, Yahoo Finance, and Bloomberg. Our mission, as always, is to pull out the most important bits, give you that full picture, and really help you understand what's actually moving the markets and shaping the economy right now.
And it's pretty striking looking at today's sources, just how much the global conversation is circling around these new tariff announcements. The reactions are immediate, complex. We're definitely focusing on semiconductors, that's critical, but also looking at, other big shifts in tech and monetary policy. It's all deeply connected.
Okay, yeah, let's unpack that, because our sources show this fascinating, almost contradictory mix sometimes. Jitters in some areas, gains in others. It really shows how these big policy decisions just ripple out. And for you listening, this isn't just abstract stuff. It hits industries, investment, even the products you use daily, right? Let's start with probably the biggest one shaking up global trade right now, President Trump's announcement, a 100% tariff on semiconductor and chip imports. But here's the really critical detail coming from CNBC and Yahoo Finance. A major carve-out, an exemption for companies building in the United States. That's the key part.
And this exemption, it just immediately splits the market reaction. What's really insightful, as CNBC reported, is the instant impact on Asian chipmakers. Now, the specifics on, how much U.S. building you need for the exemption, still a bit murky. But we saw a mixed bag straight away. Japanese chip stocks, think Tokyo Electron, Renesas, Adventus, they initially dipped. Tokyo Electron was down over 5% at one point before recovering a bit. It just underlines how much the market craves, policy clarity right now. Investors are hedging, against that uncertainty.
That's a sharp reaction, definitely. But the really interesting part, maybe counterintuitive, is that some huge players actually went up. Shares of Samsung Electronics, SK Hynix in South Korea, and the world's biggest player, TSMC out of Taiwan, they totally bucked that trend. According to those Thursday morning reports from CNBC, Samsung climbed, 2.47%, and TSMC over 4%.
So that makes you wonder, right? Why the split reaction? Same industry, same tariff news, and our sources point directly to their U.S. investments. Big ones. Long-term ones. TSMC, for example, has pledged a massive $165 billion for 3 plants down in Arizona. NVIDIA is talking $500 billion for U.S. AI infrastructure over the next 4 years. Global Founders, $16 billion for New York and Vermont facilities. Even Apple, planning to use Samsung's chips made in Texas, announced another $100 billion investment in U.S. companies. These are just staggering numbers, and they clearly signal to the market who the, quote, clear winners are here. As Daniel Newman, CEO of the Futrim Group, put it, it's about companies with the most dollars to pledge, getting those big wins Trump wants.
Okay, so if the giants are signaling with billions, what about the smaller guys? The companies that just, don't have that kind of cash to throw at U.S. manufacturers?
Yeah, exactly. Daniel Newman suggests those smaller companies, without that scale, that leverage, they're probably going to have to negotiate their path, much less clear. And while that headline shock, 100% tariffs definitely shook things up, Andrew Jackson at Ortis Advisors offers an interesting take. He thinks it could actually be a positive for Japanese equipment suppliers. Why? Because their gear is, quote, indispensable for ramping up all that U.S. production that's needed now. But, and this is crucial, as Yale's Ernie Tedeschi over at the Budget Lab points out, the devil, as they say, is in the details. The exact rules, how these tariffs actually work day to day, still missing. CNBC highlighted that point. So for you, that means continued uncertainty in supply chains. Companies are just waiting.
Right. So while the chip industry is grappling with these really targeted tariffs, let's zoom out a bit, because this isn't happening in a vacuum. Our sources at CNBC and Yahoo Finance show President Trump's wider reciprocal tariffs are really kicking in now, reshaping the whole U.S. trade picture. He wrote on Truth Social, it's midnight. Billions of dollars in tariffs are now flowing. It goes way beyond chips.
Absolutely. If you connect the dots, many U.S. trading partners are suddenly facing much higher duties. India, for instance, gets hit with an extra 25%, bringing their total up to 50%. And that's specifically linked, according to CNBC and Bloomberg, to its Russian oil purchases. And some of these are, unexpected. Switzerland got slapped with a 39% tariff, despite last-minute talks. Yahoo Finance noted that surprise. Meanwhile, the EU, Japan, South Korea, they managed to negotiate lower rates, around 15%. The UK got 10%. China and Mexico. Kind of on pause. Canada's rates aren't changing this week, so it's a very selective approach, very dynamic.
And clearly, this whole tariff game isn't finished. Not by a long shot, even with some deals done. Bill Papadakis at Lombard ODA mentions some recent market optimism because of those deals, but he warns pretty strongly against being overly optimistic.
Mm.
The impact on growth, on inflation, still really unclear. That perspective from CNBC is a good reminder that it's complex, still playing out. No consensus yet on the long-term effects.
And we've definitely seen direct market reactions outside of chips. Indian stocks, for example, fell early Thursday after that 25% tariff news hit that was reported by CNBC. Interestingly, though, oil prices actually went up after the chip tariff news. CNBC had Brent crude up 1% to around $67.56. WTI crude added about 1.13% to $65.06. Also from CNBC, China's July exports, they actually beat expectations sharply, up over 7%. And imports had their biggest jump in a year. So that suggests, despite all the trade tension, global demand for Chinese goods is still pretty robust. And China's domestic economy might be picking up steam, too, based on those imports.
Okay, so tariffs are clearly a huge driver, but it's important to get a sense of the kind of the broader mood influencing investors, right? And on that, Jim Cramer's comments reported by CNBC really seem to capture it. He called it a market that's all over the map. What's he getting at there?
Well, Cramer's all over the map isn't just like general volatility. It signals something deeper, a shift away from whole sectors moving together. Now it's much more selective, driven by compelling, sometimes speculative narratives, maybe more than traditional numbers. He's saying it's not group moves anymore, but individual stocks with bizarre narratives. You see expensive stocks just keep climbing, even when maybe they shouldn't, based on old metrics. Meanwhile, solid companies like Disney, Honeywell, DuPont, delivering good results but being, quote, ignored by Wall Street. Why? They lack that captivating story. It's less about the P/E ratio, more about the perceived future story.
Yeah, he even pointed to stocks with lots of short sellers like Palantir and Arista Networks, just steamrolling the short sellers when they get good news. He called Palantir a one-of-a-kind juggernaut meme stock that can't be stopped. It really sounds like, as Cramer put it colorfully in that CNBC piece, haters gonna hate and lovers just keep buying. It's blunt. Almost sounds like a meme itself, but it surprisingly kind of captures that maybe irrational energy behind certain stocks now. Fascinating dynamic for investors, maybe a bit bewildering too.
And this highly selective, narrative-driven market, that's really important context when you look at foreign investment trends. Reuters is reporting that foreign investors poured billions into Asian stocks again in July. That's the third month straight. Taiwan and South Korea were the big winners, pulling in a combined $25.7 billion over those 3 months. That suggests strong appetite despite everything else going on.
Okay, that surge into Taiwan and South Korea specifically, they're the big Asian tech exporters, right? That feels significant. Is it just general appetite for Asia, or is something else driving that? Seems to fit with another big theme.
That's a great question, and the sources are pretty clear. It's not just general investment. That flow into Taiwan and South Korea is directly tied to the global surge in AI investment. These places are ground zero for the AI supply chain, the chips, the components. At the same time, you see contrasts elsewhere. India saw sharp outflows, over $2 billion in July, breaking a 3-month buying streak. Indonesia, the Philippines also saw outflows. Thailand, though, actually saw inflows for the first time since last September. Investors picking up stocks at, quote, relatively cheap valuations, though Kenneth Tang at Nikko Asset Management points out political uncertainty is still a factor there. So these shifts, highlighted by Reuters, they really underscore how selective, how strategic foreign money is right now, chasing specific stories like AI while being cautious elsewhere.
Right, speaking of AI,
Yeah.
our deep dive really wouldn't be complete without touching on that battle for AI dominance. A CNBC source flagged Meta, Facebook's parent, as a potential dark horse, challenging Apple and Google for AI supremacy on our devices. That's a bold claim.
Well, what's particularly insightful, according to the source, is Meta's extraordinary distribution advantage. Think about it. Data from 3.48 billion users across Facebook, Instagram, WhatsApp, that real-time, deeply personal data. It's seen as a massive asset for delivering truly personalized AI. That's according to Claire Pladel-Bouverie at Lion Trust Asset Management, cited by CNBC. She argues proprietary data is key for AI products, and Meta's communication and social data is incredibly personal, incredibly current. That could be a unique edge.
Okay, but hold on. Meta doesn't own an operating system, right? Not like Google with Android or Apple with iOS. So how do they really compete if most people are going to interact with AI agents through devices running those other guys' operating systems? Seems like a big hurdle.
That's definitely the counter-argument. Ben Berenger at Quilter Cheviot points out it's just far easier for Google, Apple, and Microsoft to push its AI tools to users through their OS. Makes sense. However, Pladel-Bouverie offers this really provocative idea. She suggests the OS of the future is essentially going to be the OS of agential AI. which is different from the app-based OS we use now. Think less about clicking apps, more about having an intelligent agent that proactively does things for you, like a truly advanced digital assistant, not just the phone system itself. So maybe the definition of OS changes in an AI world.
So Meta's big, expensive push into the metaverse, even though it's still developing, losing billions. Maybe that's the long game. An attempt to build its own OS, its own environment where its AI is the main event, not just another app on someone else's platform. As Behringer suggested in that CNBC article, it's a strategic play for control, owning that future AI interface. High-stakes gamble, though. Okay, so to round things out today, there's one more significant development worth noting coming from both CNBC and Bloomberg sources, and that's the open seat on the Federal Reserve Board of Governors. This isn't just filling a vacancy, it's influential.
Right. Governor Adriana Kugler's resignation gives President Trump a number of strategic options for her replacement. And this raises a really critical question about where the Fed might be headed. Will he appoint a, quote, shadow chair? Essentially, someone on the board whose main job is to publicly challenge Chair Powell's policies. That could create real internal friction, market uncertainty. Or will he go for a more conventional, maybe less disruptive, long-term nomination? Krishna Guha at Evercore ISI, noted by CNBC, highlights how this choice impacts how the Fed operates its perceived independence. The stakes are pretty high.
And Trump's been very clear, hasn't he? He wants people who favor aggressive rate cuts, talking even 3 percentage points potentially. That's a stance former Fed Chair Janet Yellen called frightening to markets, as CNBC reported, because it could seem like interference with the Fed's independence. For you as an investor, this could signal a much more volatile path for monetary policy if that traditional autonomy seems shaky. We're hearing names like former Governor Kevin Warsh, former NEC Director Kevin Hassett floated. Trump says a decision is coming soon. He clearly wants to shape the Fed's future. That could ripple everywhere.
So wrapping this all up, what does it mean for you? We've seen these fluctuating tariff impacts, especially in semiconductors. We've seen these dynamic, almost narrative-driven shifts in global investment. We've looked at the high-stakes race in AI, and now this potential shift at the Fed. It's all incredibly interconnected. These aren't just abstract headlines. They're signs of really big shifts in trade, tech, economic policy. And they could touch everything from, say, the price of your next phone to your investment portfolio, even interest rates down the line.
Exactly. And maybe think about how these tariff policies might speed up or slow down that diversification of global supply chains we hear so much about. What does that mean for innovation? And how do you see that battle to be the UI for AI playing out? You've got the OS owners with their built-in advantage versus content giants like Meta with all that data. Who wins? And maybe more personally, what kind of AI assistant would actually serve your needs best in this landscape, beyond just what the big platforms push at you? Lots to chew on there.
That's our deep dive for today. We really hope this journey through today's major financial headlines has given you some valuable insights, maybe sparked some curiosity about what's coming next. We'll see you all tomorrow morning with new headlines from major financial magazines.